Two AI labs dropped their biggest models on back-to-back days. Software stocks lost nearly $1 trillion in value, and Apple quietly handed the keys to Siri over to Google. This was one of the wildest weeks in AI we have seen in a long time, and I have a lot to unpack. Welcome back to the show. This is your weekly AI briefing for February 8th, 2026. Today we are covering the back-to-back launches of Claude Opus 4.6 and GPT-5.3 Codex, a historic stock market sell-off, Apple's controversial deal with Google, and a regulatory showdown over deepfakes. Let's get into it. All right, let's start with the headliner. On Wednesday, February 4th, Anthropic released Claude Opus 4.6. The very next day, OpenAI fired back with GPT-5.3 Codex. Two heavyweight launches less than 24 hours apart. You could not script better rivalry if you tried. Let's talk about Opus 4.6 first. This is a major upgrade. Anthropic expanded the context window to 1 million tokens. That means you can feed this model an entire codebase, a full legal discovery set, or hundreds of pages of financial documents, and it will process the whole thing in a single pass. The max output also jumped to 128,000 tokens. But the real headline feature is something Anthropic calls agent teams. Instead of one AI stepping through tasks sequentially, Opus 4.6 can spin up multiple specialized agents, a planner, a researcher, a coder, a tester, and run them in parallel. These agents share state, hand off work products, and coordinate with each other. Think of it less like a chatbot and more like a small AI department working on your project simultaneously. On benchmarks, Opus 4.6 scored 68.8% on ARC-AGI-2, a test designed to measure progress toward artificial general intelligence. For context, the previous version scored 37.6%. That is nearly double. It also posted the top score in the tools-assisted category on Humanity's last exam, a tough multidisciplinary reasoning test, hitting 40%. Though it is worth noting GPT 5.2 Pro still holds the overall lead on that benchmark at 50%. Now, OpenAI's answer was GPT 5.3 Codex. This one is fascinating for a different reason. It is the first model that OpenAI says was instrumental in creating itself. The Codex team used early versions to debug its own training pipeline, manage deployment, and diagnose test results. It is 25% faster than its predecessor and combines the coding power of GPT 5.2 Codex with the reasoning capabilities of the base GPT 5.2 model. On SWE Bench Pro, a gold standard evaluation for real-world software engineering, it scored 56.8%. It hit 77.3% on Terminal Bench 2.0. And here's something notable. OpenAI classified this as a high-capability release in the cybersecurity domain, their first time doing that. They activated additional safeguards and launched a $10 million program for cybersecurity defense work. That tells you something about how powerful these coding models are getting. Independent testing showed an interesting split. Opus 4.6 tends to lead on raw benchmark scores and consistency. GPT 5.3 Codex is faster and more flexible in agentic workflows. The takeaway? We are in a genuine two-horse race at the frontier, and both horses just got significantly faster. Now here's where things get really interesting. The release of Opus 4.6 did not just make headlines in the tech press, it sent shockwaves through Wall Street. Earlier in the week, Anthropic had released a set of industry-specific plugins for Claude Cowork, its AI workplace assistant. These plugins let customers adapt Claude for specialized sectors like legal, finance, and data marketing. Investors looked at that and panicked. Thomson Reuters, one of the biggest names in legal and financial data, dropped nearly 16% in a single day, its worst day on record. LegalZoom sank almost 20%. Salesforce is now down 26% this year. The S&P 500 Software and Services Index fell 9% over 5 trading sessions and is now more than 20% below its October peak. In total, the sell-off wiped out roughly $285 billion from software, financial services, and asset management stocks. And then Opus 4.6 dropped on Thursday, adding fuel to the fire. FactSet dropped another 10%. S&P Global, Moody's, and Nasdaq all took sharp hits. The fear is straightforward. If AI can do what legal software, financial analytics platforms, and enterprise SaaS products do, but faster, cheaper, and without a per-seat license, then the pricing power that has underpinned these businesses for decades might be eroding. Some analysts are drawing comparisons to the DeepSeek selloff in January 2025, when Nvidia lost nearly $600 billion in market value. But not everyone is panicking. Some Wall Street analysts push back hard, arguing this is an Armageddon scenario that is far from reality. JP Morgan's Mark Murphy said, "It is an illogical leap to extrapolate personal productivity tools into a replacement for every layer of enterprise software." And honestly, they have a point. Enterprises do not overhaul billions of dollars of infrastructure overnight. But the direction of travel is clear, and the market is pricing in that future faster than most expected. All right, shifting gears. Apple and Google made one of the most significant partnerships in tech this year, and the details are still getting sorted out. Apple is integrating Google's Gemini models into its foundation models to power a smarter, more personalized Siri. The update is expected with iOS 26.4, likely in March or April, with a beta rolling out in mid-February. The numbers are striking. Apple is reportedly moving from a 150 billion parameter model to a tailored Gemini model with 1.2 trillion parameters. That is an 8-fold increase. The price tag is rumored to be around $1 billion per year. And here's a fun detail. Apple chose Google over Anthropic because Anthropic reportedly wanted 1.5 billion per year. But there is a controversy brewing. During Alphabet's earnings call, CEO Sundar Pichai described Google as Apple's preferred cloud provider for developing next-generation models. A few days later, Apple CEO Tim Cook insisted Siri will run on-device and in private cloud compute. Those two statements do not obviously fit together. The likely explanation is a tiered system. Basic Siri functions stay on device, as Apple has always promised. More advanced capabilities powered by Gemini run through Google's cloud. But the lack of clarity has privacy advocates concerned, and rightly so. For a company that has built its brand on privacy, handing any piece of Siri to Google's servers is a meaningful shift. Okay, let's talk about something that flew under the radar, compared to the model wars, but matters a lot. The UK just launched formal investigations into Elon Musk's X and XAI over Grok's deepfake problem. The UK's Information Commissioner's Office and Ofcom are running parallel probes into whether Grok's image generation capabilities violate data protection laws. The trigger was disturbing. Grok has been used to generate non-consensual sexual imagery, including of minors. A Reuters investigation from February 3rd tested Grok by submitting fully clothed photos of real people. In 45 out of 55 attempts, Grok produced sexualized images. When the same prompts were given to ChatGPT, Gemini, and Llama, none of them generated the images. Most issued warnings against creating content without consent. Musk has called the UK government fascist and accused regulators of looking for excuses for censorship. But the numbers speak for themselves. If your model produces harmful content 45 out of 55 times, when competitors produce it 0 times, the problem is not regulation, it is engineering. The UK is also preparing to criminalize generating non-consensual, intimate images using AI. If X is found in violation, fines could reach £18 million, or 10% of global revenue, whichever is greater. French prosecutors have also raided X's Paris office over related concerns. And finally, keep an eye on the bigger picture. Funding into AI startups hit $30 billion in January alone. XAI raised $20 billion. Anthropic expanded its latest raise to over $20 billion. The infrastructure build-out is enormous, with Micron breaking ground on a $100 billion semiconductor megafab in New York. Meanwhile, Chinese AI companies are not slowing down. DeepSeek is planning a V4 release mid-February. Moonshot AI's Kimi K 2.5 is turning heads with video-to-code generation, where you show it a video demo and it writes the working code to match. And Alibaba's Qwen 3 Max thinking model is beating Western benchmarks. The gap between Chinese and American frontier models continues to narrow, and more Silicon Valley apps are quietly shipping on top of Chinese open source models. So that is the big picture for this week. The headline you will want to remember is this: we are entering the era of AI agents, not just AI chatbots. And the market is starting to price in what that means for the entire software industry. Keep an eye on how enterprises actually adopt these agent team features over the next few months. That will tell us whether this sell-off was a panic or a preview. If you found this useful, share it with someone who is trying to keep up with AI. I will be back next week. Until then, stay curious.